Welcome to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. There was one major news story that dominated its fair share of headlines in recent days, and of course the ongoing conflict in the Middle East and the U.S.'s involvement in the form of strikes launched by the Trump White House. While many have differing opinions on the U.S. getting involved in yet another conflict around the world, one thing is certain that many can agree on: we don't want any more geopolitical issues impacting the U.S. economy. Here to help us break it all down this week is Alex Nowrasteh, VP of Economic and Social Policy at the Cato Institute. Alex, it's been a busy news week. Really appreciate you joining us here today.
My pleasure. Thanks for having me.
So let's start in terms of, different components of the financial markets. Obviously, the oil component is a huge story that we've been tracking for the better part of the last 2 to 3 weeks. How have you seen and what are you looking for in the ongoing conflict impacting things like the global oil supply chains?
Well, I'm really taking a look at how the Iranian government decides to respond to both Israel and the United States conducting airstrikes on its territory. I think one of the things we've learned is that the Iranian regime was probably a lot weaker than anybody thought. So it was always taken for granted that they were going to try to close the Straits of Hormuz, through which a significant share of the world's globally traded oil travels every day. This would have a big impact on global oil prices. Oil is, of course, a fungible commodity. It would have affected oil directly going to China, but raised the price of oil globally. And what we saw, I think, is the Iranian regime was not really able to do that, or at least unwilling to do that in response to those to those attacks. We've also seen, I think, the war not spread yet. So I'm cautiously optimistic about that. I'm cautiously optimistic that it will be contained. And so I think those are the two things to notice: the sort of fecklessness and incompetence and limited response of the Iranian regime, and the conflict being relatively contained.
I think originally with the outbreak of the conflict, there have been a lot of questions, to your point, about to what degree does this spread? Does the United States get involved? Does Russia get involved? Does China get involved? While it certainly seems as if maybe in the short term, much of this conflict is somewhat put behind us, I think it's anyone's guess how this plays itself out. And I wonder, Alex, are there certain cues from particular countries you'll be looking for to give you a sense of that answer, that yes, this is growing to now include and encompass other countries, or give you greater confidence that the conflict we've seen the last few weeks is relatively contained?
Well, I mean, I just don't think it's going to travel to another country if the Iranians and the Israelis and the U.S., if we just stop bombing each other, which we haven't done in a little while now, a few days, then I think the chance of it spreading is tiny. I mean, Russia has its own war that it's fighting in Ukraine. China doesn't seem that interested in fighting a war. There's really nothing to be gained by getting involved on the Iranian side, whatever that could even possibly mean. So I'm pretty down on that happening. I think the thing to really watch, though, is how the Iranian regime will react in the next several weeks and months. I think the reason why a lot of countries want nuclear weapons is to defend themselves against attack, to deter other people attacking them. And the fact that you had Israel and the United States launch airstrikes, I think, is probably the biggest point to convince the Iranian regime that they should head full steam ahead as much as possible to getting nuclear weapons. And, supporters of the strikes would say, well, they're going to do that anyway, and maybe that's true. But opponents are right that this has just proven, I think, to Iran and a lot of other countries, these airstrikes have proven to them that having a nuclear weapon would have prevented these strikes from occurring. Of course, on the other hand, Iran could react to these strikes by putting moderates in power who want to deal with the West, who are not interested in building nuclear weapons, who are not interested in aggressive foreign policy. We're in very sort of uncharted territories here. I think we could see it breaking either way. But I think what everybody definitely agrees on is that these strikes were quite a risky move by the United States and Israel.
Yeah, we saw those attacks, of course, on Saturday night. We heard comments from the president then and throughout the day since. At least, Alex, as you and I are recording this conversation, we are seeing Brent crude tick back up. It is now really, I say only, trading at just south of $68 a barrel. I think there had been fears it would be much worse, and we're really within 10 points, believe it or not, of an all-time high for the S&P 500. It is remarkable to me how we have seen equities respond when there was so much concern that the response would be fundamentally different. What do you make of the kind of evening out and the overall resilience for the market, at least on the stock market side of things, despite the backdrop of geopolitical uncertainty, trade and tariff-related uncertainty, and anything else that is weighing on investor sentiment?
Yeah, I mean, I think you hit the nail on the head. There's an enormous amount of uncertainty produced by the U.S. president, by President Trump, the uncertainty on tariffs, on immigration, and on these geopolitical issues. But there is a good headwind, and that is the Senate is debating the One Big Beautiful Bill. which includes extensions of some very important parts of the Tax Cuts and Jobs Act from 2017, including permanent full expensing, which would be an enormous boon. I think the markets are starting to price in the probability of a good tax bill being passed. Now, this bill has a lot of other problems, enormous spending, it increases deficits. That definitely needs to be addressed. But in terms of policies that affect firms' ability to invest and to produce goods and services and to make profits by selling us the things that we want, then I think that this bill is looking more and more likely to be passed, more and more likely to become law, and the markets are pricing that probability in. So those are some positive headwinds, or I'm sorry, positive winds pushing us forward that are counteracting the negative winds of the uncertainty and geopolitical risk.
What are the big catalysts that you will be closely paying attention to in the days, the weeks, and the months ahead to give you a sense that at least some of this overall uncertainty, we're finally getting answers on some of these big unanswered questions?
So I think the bond markets, the yields in U.S. Treasuries are really important to watch. I think that the new economic numbers that come out, of course, on employment, on inflation, are very important. They'll give a window into what the Fed could do in the next several months, in the next year, and basically what happens with the whole saga about the Federal Reserve and Trump's sort of ongoing war with Jerome Powell. Does Trump appoint a successor prior to the end of Jerome's term or Powell's term in May, so that Powell becomes sort of a lame duck in office? These are all things to watch and to pay attention to.
Yeah, let's talk about a little bit about Jerome Powell, because despite the early criticisms of course, of the central bank being too slow to respond, the whole transitory flap we all remember very well from a few years ago, I would argue Powell has been remarkably consistent to say we're data dependent, 2% is the goal, we watch for potential deteriorating conditions in the labor market that might force our hand otherwise. This is a new type of rhetoric coming from a sitting president, because we've often talked about the importance of perceived, at least, Fed independence, and yet now you have a president who has said as recently as this morning, I've got a list of 3 names, maybe 4 names, maybe I announce that person sooner rather than later. I have always wondered if that happens, Alex, at what point does the market start to take its cues from that nominee and what he or she says publicly versus what Jerome Powell says publicly? And I'm curious your thoughts as you watch the president launch attack after attack at his own Fed chairman, who he nominated in his first term, by the way, and what you'll be looking for in that careful dynamic, because Powell's dealing with a different set of pressure points there in Washington where you are than previous chairmen of the FOMCs have had to before.
Listen, central banks have never performed that well historically, but what we do know is that those that are relatively more independent from the government and have more decision-making power, at least independent from politicians, do perform better. So this is an important game to watch. It is concerning that President Trump is making moves against the Fed chair, trying to reduce their independence, trying to tell them what to do. It reminds us of a lot of actions and statements that President Nixon took right in the middle of the last, second term of great inflation in the last 50 years, right? So that is very concerning. It's very worrying. If there's a lame duck scenario, I think we could see some very interesting and troublesome economic conditions. But what is going to remain the case is that Jerome Powell is going to be in there, I think, until May. He has a lot of tolerance for political nonsense being thrown his way. The courts said in a recent case that the Trump administration, the president, can fire the heads of independent agencies except for the Fed, which is probably the reason why Trump is talking less tough about central bank independence than he used to, right? He used to say he was going to fire Powell, he's going to replace him. Now he's going to appoint somebody else so that Powell will be a lame duck. So just watching this scenario carefully, but I do think Powell, if he wants it and if he has basically the guts to remain, will be chairman in there regardless of what President Trump does.
Yeah, absolutely. Let's talk about that budget reconciliation bill working its way through the hallways of the U.S. Capitol there in Washington. The president calls it his one big, beautiful bill. This is the Republicans' one bite of the apple at budget reconciliation, which historically, as you well know, Alex, this is not what the budget reconciliation process was ever designed for. But increasingly over the last decade, I would argue, we've watched Democratic presidents and Republican presidents try and kind of weaponize the reconciliation process as a sort of catch-all bill that does not really require 60 votes in the Senate. It lets you kind of get away with legislation with a 50+1 majority. We saw Biden use it for several high-profile pieces of legislation. What are you looking for as we watch that reconciliation bill play itself out, knowing how important it is to the current agenda of the Trump White House?
So the most important things I'm looking at are a lot of the tax provisions to make sure that full expensing is in there, to make sure that the best portions of the Tax Cuts and Jobs Act get extended, but also watching to see what ridiculous portions of tax plans get enacted. So for instance, the idea of no tax on tips, that's a ludicrous idea. Watching that to see what happens there. And of course, watching, importantly, the spending and deficits. I mean, I'm a believer in the long run, the tax rate is equal to the spending rate, the amount that is spent in the economy, because that money is going to have to be paid for eventually, one way or another, through higher taxes or inflation or another way. So watching those are very important. I got to say, the tax provisions are a real mixed bag. There are a lot of great things in there and a lot of very bad things in there. Both of the ones that I mentioned are in there, for instance, right now. However, the spending is a major, major problem. We need substantial cuts in Medicaid spending. We need substantial cuts across the board in military spending and other aspects of the budget to try to get the spending under control. We're on the edge of a huge entitlement crisis. Social Security and Medicare are veering toward insolvency. The net present value of the money that we owe, that we are not going to be able to pay in taxes, is around $250 quadrillion. That's a real number, quadrillion, right now in present value. That is enormous. That is not going to be paid for under the current system. We need some serious reforms in the long run. So these are the things that I'm paying attention to, just the small things like the fiscal solvency of the United States government.
Oh, yeah, it's just those casual little small issues. No, you are certainly right to pay attention to them. You mentioned no tax on tips. I want to make sure I understood it right. You are against the proposal that's being put forward for it? Is it because it's potentially inflationary, gives people a bit more take-home pay, or what's your... what do you contend about that?
It's distortionary. So it's distortionary, right? Like, I think, we want taxes to be as low as possible, to be able to fund the government to be as low as possible, but also not distortionary. And what a no tax on tips does is it preferences occupations and jobs where people make tip wages or make their money in tips rather than in other types of income. And fundamentally, we want the tax code to be neutral on that. We don't want Washington to say, well, this type of occupation is better than this type of occupation. We want it all to be neutral. We want the income to be taxed neutrally so that we can let the market decide what occupations are better or more highly compensated or where investment should be made, not Washington making these decisions.
You mentioned the potential insolvency of some of those social programs that obviously we spend a lot of money on. To the question of cutting spending, I've listened to politicians in both parties, but mostly the GOP, talk about this issue. And I watched them basically clean sweep the election in November, Alex. They got their guy. Trump went 7 for 7 in the swing states. They flipped the Senate. They kept the House. They introduced this Department of Government Efficiency. They get the world's wealthiest man to come in and talk a big game, to be fair, of Elon Musk. And he says, I think we can cut as much as $2 trillion. It does not appear as if Doge has been anywhere near as successful as the Republicans had hoped or had billed it to be. If an intentional top-down approach that's very public and very much put out there and presented to the American people to cut spending has, at least as of now, proven to be unsuccessful, how should the government actually try and go about a good faith effort to cut spending? If they couldn't do it now, what would it take?
Congress actually has to do it. I think Doge was a great idea. I supported the idea of a commission coming in and cutting as much government waste and spending as possible. But in order to get those long-term changes and to make real cuts into government spending, you need Congress and the president to work together. And remember, when Donald Trump came in, he said he didn't want to cut any entitlements, he didn't want to cut defense, and he wanted to keep making bond payments. That leaves somewhere around 10 to 15% of the budget to take a look at, to cut, and that is, roughly about $1 trillion. And the deficit's $2 trillion. So the idea that Doge could come in and cut the budget down to size to balance it without touching entitlements to the military or payments on interest and national debt, it's just mathematically fanciful. It was never going to happen. But what we need is policymakers and Congress and we need the president to take it seriously enough to start making those hard choices. Because if we don't make them now, the markets are going to make them for us when bond yields rise and the cost of borrowing is too great that the government cannot sustain it anymore. We're going to be forced into that choice at one time in the future, eventually. It's going to be forced on us, and it's much easier to make these choices and to deal with the consequences when we choose to do it voluntarily rather than when the cold discipline of the market forces us to. And they will force us eventually.
Alex, I've been very keenly focused on Congressman Thomas Massie. He's a well-known Republican from the Commonwealth of Kentucky. He's not like most Republicans, as ironically a lot of those Kentucky GOPers tend to be the Rand Pauls, et cetera. There are a handful of them. When Thomas Massie right now is doing an interview or litigating the case against the reconciliation bill, he wears the national debt, $39 trillion and climbing, as a pin on his jacket. What is the most concerning part to you of that $39 trillion number, and how would you encourage the average American to view that number? Because it's big, and it looks scary, and it's perpetually going up, but I don't know that the average American really has a whole lot of context over what that number actually means.
No, it's entirely too large, I think, for people to understand what it means, right? I mean, $1 trillion is 1,000 billions, and a billion is 1,000 millions, and a million is 1,000 thousands, right? So these numbers are gargantuan. They are beyond, I think, our ability to casually comprehend, right? You really need like a spreadsheet to think about it, and to think about it in relation to other things. It's basically the size of the entire U.S. economy, the national debt, a little bit larger now. And the thing is, if you think it's large now, you haven't seen anything yet. The national debt is on trajectory to grow. Without meaningful correction, it will be, it'll peak. I mean, it won't stop. And what we do know about things like the growth of debt is that eventually these things do stop when it becomes too expensive to borrow. I just want the American people to understand that at some point in the future, these benefits that the government has promised people are not going to be affordable. They're not going to come. And when that happens, they need to realize that that is because of the irresponsibility of politicians and the unrealistic expectations of American voters.
Yeah, $1 trillion's a million. I mean, I don't know how many people really have that accurate context, so I'm grateful for how you broke that down relative to $1 billion, to $1 million, down to 1,000. Finally, before I let you go, Alex, I always like to ask our guests, is there something that you're paying attention to? It could be in markets, the economy, finance, politics there in the Beltway, that you think the rest of us should be paying a little bit more attention to?
So I say this to everybody. Nobody's paying enough attention to the bond markets. Nobody's paying enough attention to treasuries. And I know that you're probably like laughing on the inside and saying, what do you mean, Alex? I look at that 10 times a day. You should be looking at it 20 times a day. If you're looking at it 10, if you're looking at it 20 times, you should look at it 50 times. This is the most important market. It is the bellwether, I think, for whether there will be a fiscal or debt crisis in the United States. And when it happens, these are the stress points. So pay attention to the bond markets. Pay attention to what's going on there.
At least as you and I are talking, I'm looking up at the big board here at the NYSE. We have a little small retreat of 4 basis points there in the 10-year Treasury yield, but it was a bit of a scary scene for a lot of investors back in April when we had that divergence between the long end of the yield going up one way, those yields climbing and the dollar dropping. You don't frequently not see them in concert with one another, flashing some warning signs that we'll certainly continue to follow. Very grateful for your time and perspective today. You're welcome back anytime. Alex Nowrasteh, VP of Economic and Social Policy at the Cato Institute. Alex, thanks a lot.
Hey, thanks for having me.